In this video, I will show you guys a pretty simple trading strategy on the 5-minute chart. Now before I actually go into the video, I just want to say that I see a lot of people who make videos like this, only select the trades that are winning, and also if the trade isn't optimal they will just leave it out of the video. Now I didn't do so in this video, and I will give you all the rules and indicators you need to follow to do this strategy. Now without further ado, let's get right into it. So the first thing you want to do is to install indicators. How you can do this is by going over to indicators, and then you want to search for the EMA or the exponential moving average. So you want to search for EMA and then click on moving average exponential. Then you want to click on that one other time because you need 2 EMAs. Now go over to the first EMA, click on the settings, click on inputs and change the length to 50. You can then click on OK, and then you want to go over to the second EMA and change the length to 200. So now you've got the 50 EMA and the 200 EMA. I also recommend changing the color, however it's just something I like to do. I like to set it on white, and now I'm going to change the color of my 50 EMA, and you can then just click on OK. Now the next thing you want to install is the stochastic RSI. I've already installed this, but what you just need to do is to go over to indicators and search for stock RSI. You'll then see the technicals, and you want to click on stochastic RSI. Now you can just leave this at the basic settings, but if you don't know how to read the stochastic RSI, everything above the 80 is in the oversold territory, and everything below 20 is below or in the oversold territory. Now this means that if the stochastic RSI comes to the point right here, it will most likely lead to a price correction downwards, and when the stochastic RSI is in the oversold territory, in most cases the price will go up. Now obviously this isn't always the case, but the stochastic RSI is a really great indicator to confirm your trades. We've now installed all of the indicators needed for this video. Now what you need to do is to look for moments where the price breaks through one of the EMAs. One of the rules for this strategy is that you don't trade within the EMAs. So if the price action is between the 50 and the 200 EMA, you don't trade inside this region. Also, we're gonna trade on breakthroughs. So you want to look to the price action, and of course the price already happened, so that's why I will explain this really clearly for you, so you can even do this live. So right here you can see that the price actually broke through the 50 EMA, however like I said we don't trade within these regions. Now it bounced back up, but because it bounced back up it's not a breakthrough. So I feel like I failed to explain this clearly enough. We're not just looking for breakthroughs through an EMA. We're looking for the moments where the price went either through both of the EMAs in a decent time span, or where the price went through one of the EMAs in the direction away from the other EMA. Then when you go further on to the right, you can see the breakthrough right here. And the reason you don't buy into this trade is because you only buy when you can predict that the price will go away from the EMAs. Now in this case, when you look at the stochastic RSI, you can see that right here, it would look like a nice entry. However, because the stochastic RSI is in the oversold territory, which implies that the price will go back up, you won't buy into the trade because you know that the price will go back up to the 50 EMA, or the 200 EMA in this case. And the 50 and 200 EMA both are resistances or supports based on where they at. So it's not likely that the price action will go through the 50 or 200 EMA. And that's why we're only trading when the price will most likely go away from the EMAs. So when you go further on to the right, you'll see that right here the price went up, and right here it made a breakthrough. It went from being above both of the EMAs to breaking the 50 EMA, and after that also breaking the 200 EMA. Now what you want to do is to wait either 2 or 3 candle closes after the breakthrough. So this candle right here is the breakthrough, you'll then have this candle and this candle. So you can then open your short position and drag it onto the third candle, or the second candle actually. Now you should decide for yourself where you're gonna place your stop loss and take profit. However, I myself like to put my stop loss above the price or below the price, where I think that most retail traders will set their stop loss. Now in this case that would be around here, and that's why I will put it a little bit above that. That's because the price tends to actually retest these regions to make or to get more liquidity to move the other direction. So that's why you want to place your stop loss above where most people would like to place it, and you'll then see that if you set your take profit at least 1.5, and that's right here, you'll see that the trade actually worked out in this case. You would have walked away with a profit of 8%, which is absolutely amazing, and that's even without margin trading. So please be aware that if you're going to use this strategy, you won't have a lot of trades. You could expect to have 2 and maybe 3 trades a day. Now the reason we still bought into this trade even though the stochastic RSI is low is because, like we showed before, the price in most cases does not break through the EMAs. And in this case, the EMAs are also really close to each other, so there's even more liquidity or volume there, which will most likely make sure that the trend won't break through. Now what I myself always like to do is to actually change the stop loss. So you might set it right here at the beginning. I will just press Alt H to have the vertical line, and this would be the stop loss at the start of the trade. And then when your trade goes down, you're actually gonna move your stop loss with the trade. This actually makes sure that at certain points you have a guaranteed profit. For example, if you're right here, you could set your stop loss at, in this case, 1.68, and you will instantly have a guaranteed profit. And if you keep moving down your stop loss, there will come a time where you will cash out. This could be right here, but if you don't do this too greedy, there might even be a chance you would have only been stopped out right here, and that would have led for you to have a profit of, I think, 10%. Yeah, 10%, which is actually crazy. So that's the first trade. Now please also be aware that I myself don't use the stochastic RSI as an indicator when I'm already in the trade. It's only for me to confirm whether or not I think it's a great idea to enter the trade or not. So right here there's a lot of price action, however most of the time you're between the 50 and the 200 EMA, or you're really clinging on the side of one of these EMAs. And like I said, we don't trade those. We only trade the breakthroughs. Also right here, you've been clinging to the EMAs for a pretty long time, so I myself would not have entered this trade. That's also the reason I didn't give myself these profits, because I want you guys to have the real reality of trading with this strategy and not just the YouTube type of stuff. Like I could have said, whoa, another 10% profit, but in reality I would not have bought into this trade because the stochastic RSI is really low. And then again, there's a lot of price action between the 50 and 200 EMA, so we would not have bought into that. Now right here there's a lot of price action going on above the 50 EMA, then it makes a breakthrough to the downside, right here it breaks through to the upside and then it breaks down once again. And then you want to wait on the second or third candle, which in this case would be 1, 2 and 3. I myself would have not entered this trade as well, and right here is another one of these trades I would have taken. And the reason for that is because the RSI actually touches the oversold territory and you broke through above the EMA. And you're gonna wait for the second or third candle to close. So right here you can see that you're on the second candle, the RSI is in an uptrend and you're also above the EMAs. And right now you know that there's a high likelihood that you're in an uptrend that will run away from the EMAs. So you would have entered this trade on the second or third candle close that is above the 50 EMA. This is the breakthrough candle, then you have 1, 2 and 3. So right here you would have taken your trade, the stop loss would have been around here, and your take profit would be at least 1.5, which is right there, and you can then see that you've got a winning trade again. Now the reason you're not gonna enter this trade is because of the stochastic RSI. Even though you made a breakthrough, you're already at the oversold or overbought territory, which implies that there's gonna be a price correction. Now right here you can also see that there's a breakthrough of the 50 EMA, and a few moments later there's a breakthrough of the 200 EMA. Now you will most likely not enter this trade because of the stochastic RSI, but a few moments later you'll see that the price is back to the same level as before, but now the stochastic RSI is in the overbought territory. Now you just want to open your short position, set the stop loss above where most retail traders would set it, which actually is right here, and the take profit is at least gonna be the risk reward ratio of 1.5. And if you're gonna use the trailing stop loss, which you will have to do manually, you might even have a take profit around this level, and you would have cashed out with a 1.6% profit and a risk to reward ratio of 2.5. So that's another trade. Now this trade you would not have entered, even though it's a breakthrough, and once again a breakthrough, the stochastic RSI is in the overbought territory, which implies that there's gonna be a price correction, and you don't want the price to come down to the 50 EMAs. Here's the next breakthrough, and because of the stochastic RSI you would not have entered, but a few moments later the stochastic RSI is actually in the overbought territory, so once again you could open up your short position, you would set the stop loss above where most retail traders would set it, which is most likely going to be here because of these candles and these candles. So that's why you would set your stop loss a little bit above those, and then the risk reward ratio is at least going to be 1.5, and if you're going to use the trailing stop loss, I'd say you cashed out right here, somewhere around here, maybe even this wick. So let's say it's going to be around here. You would have a risk reward ratio of 1.75 and a 3% profit. Now I think you will understand why we did not enter this trade. It's because of the stochastic RSI. You just broke through the EMAs, now you're above the EMAs. However, the stochastic RSI is already in oversold territory. And like I said, I want this video to be realistic. So even though there's a pretty nice breakthrough right here, because of the stochastic RSI, you would not have joined. Now the same goes for the price action right here. Now right here is the next breakthrough, and you could have entered right here. However, because of the stochastic RSI, you will most likely not have. But right here, the stochastic RSI is in overbought territory, so you could open your closed position. So I'm pretty sure I didn't explain this clearly in the beginning of this video, but there's no 100% guide. You will have to imply some logic. So for example, if the breakthrough did happen, but the stochastic RSI made sure you did not enter, whenever the stochastic RSI is in oversold territory, and the price action is still below the 50 EMA or the 200 EMA, I think it's a good time to set a short position. The risk reward ratio is gonna be 1.5, which is right here, and you can then see that you have a winning trade again. If you're going with the trailing stop loss, you might even have a 2.5 risk reward ratio and a 3% profit. Another rule is that if there's a retest with a wick, you're allowed to enter. However, if the retest had a body that closed above it, like here for example, this wick right here, or actually this body, you would not enter the trade. The reason for that is just because it implies that there is not enough either selling or buying volume to keep holding the same trend direction. And because there's a wick and the body actually closed below the 50 EMA, you know that there is selling pressure, which will most likely lead to there being a trend which is downwards, which actually happened. And the power of this strategy is that you're using a trailing stop loss. So if you're not going to be too greedy, you might actually end up having this trade to like all the way down here, let's say the 50 EMA, which would be a 4% profit. And if you're margin trading, you could do the calculating. Maybe even 8, 12 or 16% profit. Now once again, there's a breakthrough, the stochastic RSI prevents you from joining, but later on the 50 EMA gets tested and the stochastic RSI confirms that it's a nice moment to short. So the next short is gonna be right here. Your stop loss will be above where most retailers will have it, which is most likely the 200 EMA or somewhere above that, and then your take profit could be all the way to 1.5, which would be right here. And once again, if you're using a trailing stop loss, it could be up to 3% and maybe 2.5%. And the next short position. There's a breakthrough, a few moments later there's a retest, and the stochastic RSI also went from oversold to overbought, which implies that there's going to be a price correction. So you're going to open your short position, set a stop loss and a risk reward ratio of 1.5, which would have been cashed out right here. And if you're using the trailing stop loss, I think you would have cashed out with a little bit less profit, somewhere around here in all honesty, and I think that's gonna be a 1.6% profit with a pretty bad risk to reward ratio, but like I said, not all trades are perfect. Right here is the breakthrough, the retest on the 50 EMA, and the stochastic RSI also confirms that you could enter your short. Once again, you're gonna set your stop loss above most of the volume, and the RRR is gonna be at least 1.5 and maybe even a little bit more, which would lead to you having a 4.4% profit. Now these are all the trades you would have made using this strategy. I just want to say this is the first time for me to make a video like this, so if not everything is explained as good as I might want it to be explained, please excuse me. And also if you've got any feedback at all, please let me know in the comments down below. Thanks for watching.